Hello guys, and welcome to the second part of Unshakeable by Robbins. So in this video I'm going to talk about how can we prepare for a bear market and the 4 principles that every great investor use when they are making investment decisions. So let's start with the 4 principles. First one, it's don't lose. Well, to most people, when they are making an investment, they are looking for how can they make a lot of money, how can they profit from it. Well, the great investors, what they are really looking for is how can they minimize their losses and how can they not lose. And they understand, and I'm giving you an example to be more specific. So imagine this, you have $100,000 and you lose 50% of that money in an investment. So you end up with $50,000. Now, imagine you invested $50,000 and you get a return for 50%. You end up with $75,000. So you truly don't get back to where you were. You need a return of $100,000 over the 50. You need a return of 100% over the $50,000 to get back to where you were in the beginning, and that might take you a decade, and that is a long time for you to lose. So don't lose. The second core principle is asymmetric risk reward. So a lot of people think that to get high returns you need high risk, but the truth is you should minimize your risks in order to get higher returns. You should look for high returns and try to minimize your risk. And the common and most and the best place for you to minimize your risks, it's in the stock market during a bear market. On the other video, I was talking about how should we look at the bear market as an opportunity to buy, because the prices of the companies are getting really low, so they are like for sale. And that is the best time for you to invest, because once the market goes back up and the prices starts going up, your profit margin will be much higher. So asymmetric risk reward is to minimize your risks in order for you to get higher returns. So minimal risk, higher return. Now the third principle is tax efficiency. This one will depend according to the country that you're into, but probably if you make a higher income, the government is most likely to take 50% of your income for taxes. The same thing goes to investments. If you hold an investment below a year, less than 1 year, the chances are the government will charge you 50% of that profit that you have in investments for taxes. But if you are smart with your investments and you hold them more than 1 year, the tax percentage can drop out to 20%. That is 30% that you keep in your profits on your pocket, just by being tax efficient, tax smart. Now the fourth principle, and the one that will help you minimize your risks, is diversification. Well, all the great investors understand the power of diversification. This one will help you minimize your risks, because if one type of investment goes wrong, you still have the other ones to help you back. So the thing you should do on diversification is diversify among the asset classes. So you should diversify between stocks, bonds, real estate, or any other type of investment. The second thing is diversify within an asset class. So imagine you buy stocks. Don't just go invest in stocks of your favorite company. For instance, don't just buy Apple stocks, because something can happen and they can get dropped, and you see your margin coming down and you losing money. So diversify within your assets. Diversify within the same asset. The third thing is, we live in a global world, so we can easily invest in other countries. So don't choose just your own country. Diversify within countries, because you take great advantages. For instance, even if one of the countries goes wrong and they start having a market crash, the stock prices are going down, you still have the other you still are enjoying the profits and the growth of other countries. So diversify within them. And the fourth thing is, there is no perfect timing for you to buy assets. So you never know when you should buy, you never know when they're going up or they're going down. So try to maintain and try to increase your portfolio. Try to diversify and increase your portfolio. For instance, if you don't have an investment on real estate, that will be a good time for you to start to invest in real estate, because it could diversify your portfolio. So these are the 4 principles that all the great investors use when they are making investment decisions. Now let's go down to how to prepare for a bear market. And to prepare for a bear market, 90% is preparation and 10% is emotion control. So during a bear market, it's not like a walk in the park. It's really tough times, and you can get your feelings can get really triggered, and you might feel the anxiety to sell because you see all the prices going down. But you gotta believe in your strategy, in the plan that you created, and you gotta stick to the plan until the end of it, until you reach your goal. So keep beside your bed a good book about sticking to the plan, and don't panic. Trust in yourself and control your emotions. Now, let's go to the 90%. The 90% is preparation. And preparation is what? First thing, preparation is diversifying, like I was saying. So, diversify between stocks, bonds, and alternative investments. What I'm saying by alternative investments is everything that is not stock or bond, or investments in cash. So, it can be your painting collections, your rare wines, it can be your vintage cars, or maybe even investments that you have made in gold, or real estate investment trusts, which is like an index fund but for real estate. So these are alternative investments that you can use in order to protect yourself, in order to diversify. Now, the stock market, it's a wonderful place for you to invest your money, because in the long run, as I was saying in the other video, the tendency is for it to go up, because workers are getting more productive and the technology is helping companies to reduce their costs, so they make higher profits in the long run, so their stock prices are going to be higher. And this is why the stock market is a wonderful place for you to invest money and you to take profits and reach your financial freedom. But now, you should also consider investing in bonds. Bonds is like when you lend money to, for instance, the government or a company. So you lend them money and they are obligated to pay. They are legally obligated to pay you a rate of return. So you know that during that time you will have consistent income for that rate of return. So every year you're making that rate of return for yourself, like an income. And this is bonds. So bonds are not very attractive because the rate of return is not very high, because it's something safe. You can count on that money every year during the period of the bond. But it's good because you're diversifying, and even if the stock market is coming to a crash, you still have the bond, you're still getting money. So bonds are still protecting you. Other thing about bonds is it's still better, that minimal rate of return is still better than keeping your money in cash, that it's not basically not producing any value to you, it's being worthless. So the second thing about preparation, so the first thing about preparation was diversify between stocks, bonds and alternative investments. The second thing about preparation is you should have money in cash. Yes, I was just saying that money in cash doesn't produce you any value, but you should have money in cash stored, the perfect amount for a rainy day, for a day that you will need some money and you will get it. And this way you don't have to sell any investment that you are into. You don't have to cut your plan in the middle because you need money. So you don't have to sell stocks or bonds just to cover your short-term expenses. So be consistent with this. Have some money saved for your short-term needs, and the rest let it develop in an investment, and control your emotions during the bear market. So these are the preparations for the bear market, and the 4 core principles that the greatest investors use when they're making investment decisions. Well, I hope you guys understand this. Hope you guys liked these videos, and that you learned something from Unshakeable book by Robbins. Well, thank you very much for watching, and hope to see you guys next video.